This voice is taken from an article with the title, "What are the key indicators to watch on the economic calendar?" which has been published on TRADERTALKSNET. The economic calendar is an important tool for traders and investors to keep track of upcoming economic events and their potential impact on the markets. It is important to stay up to date with the latest data releases and economic indicators, as they can have a significant impact on financial markets. The key indicators to watch on the economic calendar are gross domestic product, GDP, inflation, employment, retail sales, industrial production, and housing. These indicators are important as they provide a snapshot of the overall health of the economy and can give traders an insight into the direction of future economic activity. GDP is a measure of the total output of the economy and reflects the level of economic activity. It is one of the key indicators of economic health and is usually released on a quarterly basis. When GDP is rising, it indicates that the economy is expanding, and this can have a positive effect on the markets. Inflation is another key indicator to watch on the economic calendar. Inflation measures the rate at which prices in the economy are rising over time. High inflation can be a sign of an overheating economy, which can lead to increased volatility in the markets. Employment is another important indicator to watch on the economic calendar. Non-farm payroll data is released on a monthly basis and provides an indication of the overall strength of the labor market. An increase in non-farm payrolls suggests that the economy is adding jobs and that consumer spending is increasing. Retail sales are also an important indicator to watch on the economic calendar. This data measures the total amount of sales made by retailers in a given period. A strong retail sales figure indicates that consumers are spending money, which is a good sign for the economy. Industrial production is another key indicator to watch on the economic calendar. This data measures the output of factories, mines, and utilities in a given period. An increase in industrial production indicates that more goods and services are being produced, which is a sign of an expanding economy. Finally, housing is an important indicator to watch on the economic calendar. This data measures the number of existing and new homes being sold in a given period. An increase in housing sales indicates that the housing market is improving, which is a positive sign for the economy. In conclusion, the economic calendar is an important tool for traders and investors to stay informed about the latest economic data and indicators. The key indicators to watch on the economic calendar are gross domestic product, GDP, inflation, employment, retail sales, industrial production, and housing. By monitoring these indicators, traders can gain valuable insight into the direction of future economic activity and the overall health of the economy.